Let's look at the decade instead, 2000 to 2010. The gold price went from $253 to what, 1,700?
Mm-hmm.
Only a sevenfold increase. Does that work for your audience?
I think they'll be happy with that, Rick. Today, it's a big honor to be joined by Rick Rule here in Ron's basement. Rick, welcome to the basement.
Thank you for the opportunity to have a visit with you and your audience.
Well, I feel like I have an unfair advantage, Rick, because I've spent probably 10 to 15 years watching interviews that you do on YouTube. I have to admit, if there's one person who I feel like I've learned the most from over the years, where I have those moments where I think, wow, I never thought about it that way, or a new concept had been introduced to me, it's usually when watching you. So thank you for joining us today.
Kind of you to say. I hope I made you some money over the last 15 years.
Yeah, well, you've got some great advice and some great sayings, and if we have time at the end, I want to ask you about a couple of your sayings that I've heard over the years. You know, recently I heard you talk about this idea that from around 1982 until around 2022, that the United States had been in kind of a very ideal situation in the world, and that things are changing now on a geopolitical basis, on a world economic basis. Could you expound upon that a little bit for us?
I can, with the caveat or disclaimer that I'm really a credit analyst. I'm not an economist. But it occurs to me, looking back over the last 50 years, that post-1982, post really the Volcker experiment, raising interest rates very high to kill inflation, and the Reagan experiment, which didn't actually reduce the size of government, but reduced the growth of government, that we entered into a 40-year period that was probably unparalleled for the last 2,000 years. Unparalleled in the sense that it was probably the most benign economic epoch in recorded history. Let's look at various things. 40 years of declining nominal and real interest rates. 40 years, at least for Americans, with the hegemony of the US dollar relative to other currencies. So we could export a lot of our economic problems. The demographic bulge of the baby boomers, coming of age, earning, saving, inventing, working. The benefits, too, of globalization, the good parts of globalization, where nations were able to trade more freely with each other and focus on those attributes in their own economy where they had durable competitive advantages. Incredible inclusion in the workforce, the addition of women to the workforce, whether we care to admit it or not, the more free admission to minorities in the workplace. So a greatly, greatly expanded labor force and greatly expanded economic participation. Unfortunately, that began to change, I think, in 2022. A few things happened. And by the way, we squandered some of the advantages in the last 40 years by artificial liquidity, by excessive government spending, by debt and deficits. But we were able to afford that for 40 years because of these incredible demographic tailwinds. Mm-hmm. I think the chickens began to come home to roost in 2020, but they really manifest themselves in 2022 when the interest rates began to rise, when the US dollar's rise against other currencies became less precipitous, at the same time that the baby boomers busted, which is to say we are now leaving the workforce, leaving the saving force, consuming rather than creating, where the good forces of economic globalization have begun to be replaced by geopolitical competition and nationalism. By the way, I'm not saying that the world's going to go to hell in a handbasket. All I'm trying to say is the next 10 years is going to be a lot harder than the last 40 years have been. And if your game plan involves an observation of the fact of the last 40 years and you project that over the next 10 years, my suspicion is that you're going to run into some problems. Betting on lower interest rates or a stable dollar when the on-balance sheet liabilities of the US government exceed $34 trillion and the off-balance sheet liabilities, that's a fancy word for entitlements, Medicare, Medicaid, Social Security, all that kind of stuff, exceed $100 trillion, I think is mistaken. You know, we played a smaller version of this game in the 1970s. We went into the 1970s having fought the war in Vietnam and lost it, and the war on poverty and lost it. And we had voted ourselves a bunch of benefits in the 1950s and 60s that were unsustainable. The way we dealt with that, of course, is that we inflated away the net present value of the obligations. Over the decade of the 1970s, the purchasing power of the US dollar, which is to say the purchasing power of people's savings and salaries, declined by over 80% in 10 years. Again, I'm a credit analyst. I'm not an economist, but I don't see any way over the next 10 years that we can service $130 trillion in total obligations with a budget that's in deficit $2 trillion a year without inflating away the net present value of the obligation. I see past as prologue in this circumstance. And I think that people who understand this will get through the next 10 years just fine. Challenged, to be sure. Those people who don't understand it, I think, face some real misery.
What about this notion? I heard somebody once say, mathematics shows no forgiveness on the altar of truth. That when we just look at the numbers that you brought up, that whether you're talking about Argentina or Zimbabwe or the United States, are we still at such an advantage that we can defy the laws of mathematics, or will the hens come home to roost? If you're looking to buy gold, silver, or platinum, do yourself a favor and check out Pimbex, the online precious metals bullion dealer and sponsor of Ron's Basement. I was a happy customer before they offered to support the channel. You'll find they have the best prices, quality, and service. I think Pimbex is best, and you will too. And be sure to tell them that you're from Ron's Basement.
I think everything's relative. I think the United States will get through this better than other countries. Despite our best efforts, we will lose the race to the bottom. My friend Doug Casey famously says the US dollar is the worst currency in the world with the sole exceptions of all the others. And we still live in a society that is so creative that a group of teenage geeks can commandeer a garage in Sunnyvale, California, and out pops Google or Apple. The lesson that we learn, however, Ron, is that it is our individual tenacity, hard work, and creativity that has funded our collective stupidity. And the fact that we have the ability to continue to do that, even though the math gets worse and worse and worse, is troubling for me. The world 15 years from now will be markedly better than the world is today. Getting from here to there, I think, will require some understanding and some effort as individuals. The lesson that I want to leave your audience is don't rely on the state, particularly if you're a younger person and you think that the level of benefits which you are going to enjoy when you retire are going to be as generous as the benefits which are available to me currently. You are sadly mistaken. You are going to have to prepare yourself for your own future.
Yeah, very, very interesting. You mentioned the 1970s, and a lot of people in the precious metals community like to harken back to the 1970s when the gold price went up by 17 times and the silver price went from $1.50 to $50. Do you, without asking you for a prediction, but when you look at the situation now as compared to the 70s, could you see a similar type of scenario unfolding over the next 10 years?
You know, if you give a good salesman like me the use of the word could, I can sell you anything. But I don't need to make the upside case that dramatic.
Yeah.
Let's look at the decade instead, 2000 to 2010. the gold price went from $253 to what, 1,700?
Mm-hmm.
Only a sevenfold increase. Does that work for your audience?
I think they'll be happy with that, Rick.
I said this, I don't own gold because I think it might go from 2,450 to 2,600. I didn't make much money on 5 or 10% moves in my life. I own it because I'm afraid it's going to go to $9,000 or $10,000.
Mm-hmm.
That's why I own it. The decade 2000 to 2010 was relatively good to me. There was a rodeo ride, particularly 2008.
Yeah.
But that's okay. But the sort of move that I'm looking for in precious metals doesn't need to be a move like 1970s. It could be a move like 1992 to 1996, or a move like 2000 to 2010.
Yeah.
And I think one of the problems that precious metals investors have is they don't remember time, patience, and history well. It would be instructive for them to review the history of the gold price in the 1970s. You'll recall, or maybe you won't, right after decontrol, for 2 or 3 years, gold went on a pretty good tear. $35 to $200. Concern of inflation was out in the marketplace. And as a consequence, Congress allowed the Fed to raise the interest rate in 1975. That caused the gold price to fall from $200 to $100. So in the middle of the biggest rally that gold has ever seen, it fell by 50%. Mm-hmm. And Ron, I was there. It shook out a lot of the faithful.
Right.
Those people who got shaken out by a 50% decline missed a subsequent 5-year move from a low of 100 to a high of 850. The lesson here is that you need to be both patient and you need to be tenacious, because you aren't going to get a straight stair-step move that is a 3-fold or 4-fold or 5-fold move. There is going to be backing and filling. There's going to be plenty of 20% declines. People who read history will be able to weather those declines. People that don't will transfer some of their wealth to me.
Right. Can I ask you about silver? We have, there seems to be a new narrative, or the new story on silver now is not only is it a monetary metal, but the industrial component of silver. We hear about the mining production of silver not decreasing significantly, but certainly not increasing, and that there's this deficit. How do you feel about silver? Do you feel like it's in a different place now than maybe any time since you've seen during your career?
No, I don't. I think that industrial demand is an interesting component of total demand. Unlike gold, almost all the gold that's ever been mined has taken out of a hole in the ground called a mine, put in a hole in the ground called a vault. But silver, some of it goes to silver heaven. It gets used for solar panels. It gets used as a germicide. And that underpins demand. But that underpinning of demand isn't what moves silver stocks, or even silver. It's important to note, too, that silver miners only contribute to something like 17% of new supply. The rest comes from silver that's produced as a byproduct from gold mining or lead mining or zinc mining or copper mining. So trying to forecast silver supply is really difficult, because you have to understand the incentive to produce copper or gold or lead or zinc. All of that is complicated, I guess, by the fact, and I don't know why this is, but my observation has been over the last 45 years, precious metals markets, even aborted precious metals markets, are led by gold. They're led by the fear buyer. When the momentum in gold establishes the precious metals narrative for the generalist investor to come in, silver, perhaps because of its lower unit price, moves much further and much faster. This occurs after the momentum established by gold is already underway. It's important to note that. But the result is dramatic, and it doesn't happen because of silver's industrial utilization. You can see this reflected in metals equities prices. If silver were an industrial metal in the mind of investors, silver-centric cash flow on an operating basis would trade like copper or nickel, which is to say 6 or 7 times EBIT. But silver production in a pure silver producer or in a royalty and streaming company trades at 15 or 16 or 20 times EBIT, which means in the context of silver equities, you need to think of silver as a highly volatile precious metal, not as an industrial material.
Okay, interesting. I heard you say a few months back that silver doesn't have to be loved to make a big move. It just needs to be a little less hated.
Fortuna Silver Mines is a global intermediate gold and silver producer. Since 2005, Fortuna's best-in-class management has delivered impressive growth and profits. Fortuna's solid financial position and operational expertise allows for performance in any precious metals price cycle and provides a foundation from which to harvest great profits in more favorable metals markets. Investing in Fortuna is an investment in quality, long-term, sustainable production of in-demand precious and base metals.
And that's already happened.
Yeah.
The very early part of this year and most of last year, the sentiment around silver stocks was one of unremittent hostility. And that was very bullish for me. I love hate. You'll recall back to the sort of silver squeeze of 2021, 2022. Silver gained a lot of new adherents. People thought that by coming together and buying silver, that they could overcome the historic short positions in the paper market. And they failed. There is no hate, Ron, as sincere as the hate of a jilted lover. And silver probably benefited from having 500,000 jilted lovers. If I would say something nice about silver at the end of 2023 or the beginning of 2024, the vitriolic comments on social media were ridiculous. These silver bugs would question the sexual practices of my ancestors. Nothing could make me happier than that. And as that hate began to recede, what you saw is a great 50 or 60% jump in the higher quality silver juniors. Not because silver gained adherence, simply because the hatred associated with it lost its vociferousness. Yep. You'll recall the same thing happened in 2022 in the uranium trade. Nobody wanted any part of the uranium trade when uranium was at $20 a pound and had to go higher. It was hated. Yeah. When the uranium price went from $20 to $100, which is to say, when the price had already gone up fivefold, that price move validated the narrative, despite the fact that there was less money in the narrative. Yeah. Human nature is very odd.
and very interesting to follow the psychology of what goes on, especially in the silver market. No doubt. Would you say that that maybe this has changed a little bit, but that over the last couple of years or over the last year, that gold and silver have yet to get any sort of favor from the Western investors?
Absolutely true. Absolutely true. Here's the statistics from JP Morgan Chase. Precious metals and precious metals related securities and investments comprise less than 0.5% of the savings and investment assets of the American population. Mm-hmm. That's down from a 4-decade mean of 2%. Yep. So in order to perform, gold and silver don't need to defeat U.S. treasuries. They don't need to defeat NVIDIA. They don't need to defeat Bitcoin. All they need to do is revert to mean. Yeah. If they revert to mean, demand for the stuff increases fourfold. Yeah. And that's precisely what I think is going to happen, a reversion to mean. JP Morgan Chase doesn't have data, but they estimate that in 1981, the peak of the last gold and silver cycle, that the market share of precious metals and precious metals related investments exceeded 6% and may have been as high as 9%. I'm not suggesting that their market share is going to take out all-time highs. I'm just suggesting that you have a reversion to mean. And I think that a reversion to mean would make a rational gold or silver bug delirious as opposed to happy.
Yeah. Yeah. I try to explain that to my audience. And I don't know that they grasp what I'm saying, that I see what you just described as a good thing, right? The fact that we have only 0.5% of the investable assets, that, you know, you can look and say, oh, nobody likes gold, nobody likes silver. Like, no, it's a lot easier, or it's a much more profound improvement. And I would say even easier to achieve to go from 0.5% to 2% than it is to go from 5% to 8% or something like that. That this is actually a good thing if you can stomach the I don't want to say the hatred, but just the, you know, the challenges that go along with being invested in what right now is kind of an unfavorable asset.
Ron, it's interesting the way human nature works. If we were to buy physical goods,
yeah,
like if you were to buy a winter coat, you would prefer to buy that coat on sale. You would prefer to buy that coat for $200 as opposed to $400. But if it's a financial asset, for some reason, you would prefer to pay $400 as opposed to $200. If we bought gold and silver the way we bought coats or tuna fish, we would all have better outcomes. And people are stupidly impatient. When people are investing around a long-term strategy and they're expecting results over a long weekend, they're utilizing a short-term tactic to exploit a long-term strategy. That's just stupid.
Mm-hmm. Yeah, patience is key. You just wrapped up a big event, and I apologize for not mentioning this earlier during our interview, the Rule Investment Symposium. I've heard several people, highly respected people in the metals industry, say that they think it's like the best symposium that goes on. Did you come away with any like key takeaways, anything that you learned that you'd like to share with us?
I'm not sure I came away with any takeaways because I selected all the speakers myself, which meant that I was familiar with their work. I had them all there for specific purposes. The idea of the event as an educational event, which is what it is meant to be, is that we bring in, first of all, speakers around global macro who set the world stage the way it is, not the way popular media would like you to believe it was. The information that you get from us is not the information that you get from ABC or the BBC. Then we bring in portfolio managers and analysts who have made money in natural resources constantly, and good markets are bad for 30 years. Not some failed investment banking hack that failed as a technology analyst and failed as a consumer durables analyst, but rather people have made money where the rubber meets the road. My favorite feature is that we always bring in people who have built multi-billion-dollar natural resource companies from scratch so that they can talk about the fact that it takes 20 years, so that they can describe the process, their successes, their failures, so that they can teach you how to spot the $5 million company that's going to be a $5 billion company. The last thing, Ron, is this conference has been going on for 20-something years. There is a very, very high caliber audience. The idea that all the knowledge in the room emanates from the dais out to the crowd is stupid. Mm-hmm. There are 400 and something high net worth investors present and another 1,000 or so online talking to each other, comparing notes. This is really what it's about. It's a community in that sense. And I have to say, it was highly successful. We, in all of our investment products, our online boot camps, this conference, all of that, we have a gold-plated money-back guarantee. If for any reason our attendees think we didn't give them the money back, they just email me and I give them a refund. No questions asked. Thus far, we have had no refund requests
Wow.
from either our online or our live audience. And in fact, in 28 years of offering gold-plated money-back guarantees, I've had to refund less than 0.1%
Wow.
of the money raised.
Wow. So good information being shared.
Yep.
I want to switch gears and ask you about a subject that can stir up some controversy within the precious metals community, the digitization of gold. And I know that there's the World Gold Council and the LBMA, I believe, are working on a project called Gold 247.
Yep.
Any thoughts on that? And I'd like to have a brief discussion if we could.
I think it's wonderful. I mean, first of all, digitization as a whole is wonderful. I'm a guy who lives and travels and invests globally. And my life isn't just in one currency. And I love the fact that there's a whole bunch of people out there competing to make more currencies, which would serve me better. I'm a currency consumer, and I want lots of competition among suppliers.
Yeah.
I'm also a gold bug. I believe in its efficacy as a currency. I believe in it being a store of value and a medium of exchange. And as a medium of exchange, the way the gold market exists today is clunky.
Yeah.
It's difficult to make change out of a gram. And buying it and selling it at a retail level can cost as much as 7% of the purchase price if you're not careful. Digitizing gold, digitizing a deposit receipt on a non-fractional reserve basis, rather on a 100% inventory basis, and lowering the transaction costs through the blockchain or distributed ledger so that the transaction costs are, 1/100th of a percent.
Yeah.
Means that you will be able to store your wealth in gold. You'll be able to buy a cup of coffee at Starbucks with it.
Yeah.
And this is gonna come. There are lots of people trying to do it today, but you need a gold system that is standardized. You need the gold to be stored by a fiduciary that is continuously audited and has a financial statement and a balance sheet that you can see, so that you know that your gold is there. And then hopefully several sponsors could issue coins around that gold. There should be competition for this digitized gold product. I'm 71 years of age. This absolutely positively will occur in my lifetime.
Good.
My hope is that the gold standard, pun intended, will be the digitization favored by the LBMA, pardon me, and the World Gold Council. I think they'll have the backing of the gold industry. With the LBMA, they will likely have the backing of the financial services industry. It will also, in that case, be possible to store the gold, which is digitized, at various storage locations around the world, perhaps any LBMA certified storage facility, which would include places like Brinks, Loomis, and Viamat. It would be useful if the instruments which are issued against those deposit receipts were redeemable for physical gold. And I think that'll occur.
Yeah.
And it's hugely exciting for me.
So am I dreaming when I hear of this prospect and of being able to save, invest, and transact in gold, that it's making gold much more functional, for the average world citizen, but that it could also generate a huge new level of demand for gold as well. First Mining Gold is a development company advancing two of the largest gold projects in Canada, Springpole in Ontario and Duparquet located in Quebec. Each already has 5 million ounces of gold reserves, but exploration initiatives are underway at both projects to find even more gold. First Mining is well-financed, has zero debt, and owns an interest in 4 additional Canadian gold development projects.
That's accurate. I think the demand for gold will increase all by itself.
Yeah.
As people become more concerned about the maintenance of purchasing power in fiat currencies.
Yeah.
But I think that digitization of gold would, if it occurred, and I think it will occur, greatly increase demand for gold because it'll lower the transaction costs, it'll lower the storage and insurance costs, and it'll eliminate the friction in terms of using gold as a medium of exchange. I believe this will occur in the next 10 years. I've invested in a couple of these technologies. The foremost is Argo, which, the foremost in my portfolio is Argo, which is designed to operate around the World Gold Council LBMA platform. I've joined Eric Sprott in that investment. There are a lot of people who are competing and striving to cause this to occur. It will be important for your listeners to understand that there will be a proliferation of gold coin scams.
Yeah.
It'll be important for your listeners to understand that you don't want to store physical gold yourself in a storage facility that isn't public, that you can't see the balance sheet or the income statement on. I remember in the 70s when people didn't trust government, so they trusted their money to a bunch of fake storage facilities who merely stole the money. It's going to be incumbent on your listeners to pay real attention to the architecture and the principles involved in these digitization processes and schemes, because some of these schemes are going to be scams.
Yeah.
And there's going to be some highly effective pimps out there trying to separate your readers from their money. As important as understanding that it's going to occur is, it is at least equally important to understand that there are going to be an awful lot of traps for the innocent in the process.
Yeah. Well, thank you for sharing that warning. It reminds me of, I always warn people that if you're going to convert an IRA into silver or gold, don't believe the company advertising on TV telling you they're going to give you $10,000 worth of free silver, because if it sounds too good to be true, it's too good to be true.
Always.
I see on your shirt you're wearing your Battle Bank shirt today. That's a company that I've had some interest in, done a little research on. Could you give us an update on what's going on with Battle Bank?
Sure. We're ready to go, save for the FDIC approval. The so-called tough regulator, the OCC, had us approved in about 100 days. With the FDIC, it's 2 years, 4 months and counting. Now, in fairness, the FDIC is responsible for troubled and failed banks. They've had a pretty busy 2 years. Yeah. And while I don't forgive them for this, I suspect that every time something like Silicon Valley Bank or Sovereign Bank came up, First Republic Bank, that my file got a little deeper in their desk. So what we're doing now is we're going about the process of trying to acquire a bank, an already existing, already licensed bank, something in retrospect that we should have done 2 years ago. Sure. There are several candidates out there. It could be that there is a small bank that is undercapitalized that the FDIC is worried about. Perhaps we could step in, recapitalize it, and take over management.
Right.
Why are we doing this? Well, if you dial this back to 1998, a great guy from your hometown, St. Louis, Frank Trotter, and several others met on my living room floor, then in Carlsbad, California. And out of that weekend meeting came EverBank,
Right.
A bank which we grew from 0 to $28 billion in assets in 14 years, where we attracted a community of 275,000 people.
Wow.
Who believed that banking could be better. And we did make banking better. We had one US dollar deposit product. You could write checks against it if you wanted. Unlike the products offered by the big banks, this had one key feature that they didn't. We paid you interest.
Yeah.
Interest on your checking, interest on your savings. We didn't have 15 deposit products or 16 deposit products. We had one. We were in the top quartile of interest rate payers nationwide. And we also allowed people to save outside the US dollar. By the end at EverBank, I think we offered CDs, federally insured CDs, in either 22 or 24 currencies. We also offered market safe CDs that were indexed to things like the gold price, the silver price, the XAU, the S&P 500. So that your principal was protected, but you got a piece of the upside in markets that you thought were going to do well. These were enormously popular products. That bank was bought in 2014 by a big company called TIAA-CREF. They bought it because we had a great platform. Rather than recreating the platform, they could buy one that was profitable from scratch. But a lot of the products that made our bank so useful to our customers were of less use to TIAA-CREF. Their primary audience is retired teachers, and they didn't have a need for the sophisticated lending and savings product that we did. So over time, they de-emphasized those products and in effect abandoned the 275,000 customers that we attracted to EverBank. So about 3 years ago, after getting literally thousands of emails from former customers saying, would you please do it again? We decided to do it again. We're forming BattleBank. Unlike at EverBank, where we opened the door with a 0 customer backlog, at BattleBank, we have over 14,000 people on the waiting list waiting to do business with us, people who remember us from EverBank. We will, no surprise, have no branches. If you aren't sophisticated enough that your phone could become our branch, we want you to bank at another bank. That cuts our non-interest expense by 140 basis points, which we can share with you as a depositor or a borrower or a shareholder. Yeah. We will have one US dollar savings product. Write checks against it if you want. Wire money from your own account if you want. We're going to do something really wild on the lending business. We're going to lend you money against gold and silver, the best collateral we know. No other bank seems to believe that gold or silver is good collateral. This is wild to me. We have learned that there's over $33 billion in gold and silver stored in segregated accounts by Americans alone, and there's nobody there to lend against it.
Wow.
I have a sense of humor for that. We will allow you to save initially in 18 currencies, including the Canadian dollar, the euro, the British pound, the Swiss franc, the Australian dollar, the Hong Kong dollar, particularly for first-generation American businessmen that are, say, doing business in Taiwan and the US, maintaining accounts in both currencies and enjoying very cheap foreign exchange transaction fees between accounts will be of huge benefit. Mm-hmm. In addition, at BattleBank, we believe that your IRA is your IRA. At most institutions, your IRA is a receptacle for their mutual funds or their annuities. At BattleBank, you can do something called a checkbook IRA, where your IRA owns an LLC. You can buy a duplex, which you operate yourself. You can buy a franchise. You can invest in private equity. Your IRA becomes your IRA. And by the way, if you buy a duplex or a triplex or a fourplex, we'd like to compete for the first mortgage business. So anyway, as you can tell, I'm hugely excited about BattleBank. We did it before, enormously successfully. We have the same team rallied around, a better business plan, a 14,000 customer backlog, we're ready to do it again.
Yeah.
Go to battlebank.com if you think, if for any reason you're unhappy with your current bank, which I bet all your listeners are, go to battlebank.com. Check us out. We want to battle for your business.
And it sounds innovative and very high quality, just as I remember Everbank, having lived here in St. Louis and driving by on Highway 40, seeing the Everbank headquarters, and people in St. Louis thought very highly of Everbank, but not just in St. Louis, but I think around the country as well that did business with them.
We had 275,000 customers.
Yeah.
Pretty good from a standing start.
Yeah, and it was an innovative bank. I mean, very, very cool. Rick, you also have an offer that you'll make to our viewers regarding being willing to look at stock portfolios. You want to
absolutely. If your listeners have enjoyed my conversation around natural resources and precious metals, I can personalize it for them. Go to my website, ruralinvestmentmedia.com, list your natural resource stocks. Please no tech stocks. Please no crypto. Please no pot stocks. Just natural resource stocks. I will personally, for no charge, no obligation, rank those companies 1 to 10, 1 being best, 10 being worst. I will comment on individual issues if I think my comments might have value. Once again, that's ruralinvestmentmedia.com. And by the way, when you're there, you'll see a question and comments tab. If you care about Battle Bank, just write bank, and I'll send you information on Battle Bank.
Okay, and I'll have that link in the description of this video as well. One last question, since you brought up tech stocks, do you think the NVIDIAs, the other big tech stocks, are they in a bubble right now? Do you have any opinion on that?
I have no idea. I don't know how to value them. I'm a credit guy.
Yeah.
And I limit my own portfolio and the work I do to natural resource companies where I've been active for 50 years and conventional financial services, not fintechs, but banks, insurance companies, stuff like that, where I've been active for 40 years. I stick to my durable competitive advantage. I don't want to compete with those young geniuses in Silicon Valley around tech because they'll give me a spanking, and I'm too old to get spanked. So I limit my comments to industries where I have a lot of experience and I can do the spanking.
Yeah. Sounds great, Rick. I want to say thank you on behalf of myself and our viewer who's joined us today. As usual, you've given us some great insights and I believe a good education in terms of what's going on out there. Is there anything I forgot to ask you? Anything I forgot to mention?
Well, what you forgot to do is tell me that you'll come to the Natural Resources Investment Symposium 2025 in Boca Raton. I look forward to seeing you there or having you there online.
Yeah, no, I will be there. Especially, I have to say, like I said, several people that I hold very highly. I heard comment about they think that's the best symposium that goes on around the metals and natural resource sector. So it sounds like
it's no risk.
Yeah.
If you don't think you got your money's worth, email me. I give you your money back. And by the way, another good thing about it is every single one of the public company exhibitors is owned in accounts owned or managed by the conference sponsors. Mm-hmm. Sadly, that doesn't guarantee because I own a stock, it goes up.
Right.
But it does guarantee that the process is honest. You know, at every other conference I know, the qualification to be an exhibitor is a pulse and to check that cashes in reverse order of importance. At our conference, we have to know the exhibitors well enough that we own them.
Yeah.
A big difference. And I think that contributes to the quality of the conference.
Yeah. Yeah. I would agree. I think that's a key factor to consider. Like you said, you know, at other conferences, if you can pay the entry fee, you get in. But with your conference, those are, I can't think of another way to say it besides the fact that, you know, you eat your own cooking, right? Like these are our organizations that you're vested in. And
usually my cooking's tasted pretty good. You can see I'm not a skinny guy.
Rick, thank you so much. I'll be bugging you again in a few months to see if I can have you back in the basement. I really appreciate you, not just for this, but all the information you've shared over the years. I know you've helped me and a lot of people, You're very highly regarded. People say that you're a nice guy, and you've proven it again today that you are. So thank you.
Thank you for those kind words, and thank you for the conversation.